Alright, crypto fam. We need to talk about Pi Network right now because what's happening behind the scenes is absolutely mind-blowing and nobody's talking about the elephant in the room. While retail investors are literally rage-quitting and calling Pi Network a complete joke on social media, there's a whale out there who just dropped $180 million betting the complete opposite direction. I'm talking massive accumulation while everyone else is heading for the exits. What's up, Gold Rush Crypto Daily family? I'm Gold Rush, and if you're not subscribed yet, you're missing out on the daily crypto intel that could make or break your portfolio. Today, we're diving into two absolutely explosive stories that paint a picture so contradictory it'll make your head spin. We've got whales going all in while communities revolt, technical analysis screaming mixed signals, and a token unlock that could shake the entire Pi network to its core. Let's jump straight into this fascinating article from Coin Central that's got me scratching my head in the best possible way. According to this Coin Central piece, Pi Network is sitting at what they're calling a critical juncture. And folks, when I see language like that in crypto journalism, my ears perk up immediately. The token is testing the 66-cent resistance level right now, trading around 65 cents after bouncing back from recent lows near 62 cents. Now here's what's got me interested. They're describing this as classic range-bound behavior with declining volatility and reduced trading volume. As you can see in this article, we're looking at a consolidation pattern that typically signals an impending sharp move in either direction. This is textbook technical analysis, and anyone who's been in crypto for more than 5 minutes knows that these tight ranges are like coiled springs ready to explode. But here's where it gets absolutely wild. And if you're enjoying this breakdown, smash that like button because this information is pure gold. While the market's sitting in this tight range looking indecisive, there's a whale out there who clearly sees something the rest of us are missing. This whale has accumulated 276 million PI tokens over the past 2 months. Let me repeat that because it's honestly staggering. 276 million tokens worth approximately $180 million at current prices. Recent data from PiScan shows this whale withdrew 13.62 million tokens from OKX exchange just in the past week, with the most recent withdrawal of 7.38 million coins happening within the last 8 hours. Think about that timing for a second. While everyone's complaining about migration issues and calling Pi Network nonsense on Twitter, this institutional-level investor is literally backing up the truck and loading up. This isn't some retail FOMO buy. This is calculated, methodical accumulation that demonstrates serious confidence in Pi Network's future. The article points out how this whale's actions contrast sharply with retail investor sentiment, and honestly, this is exactly the kind of contrarian indicator that makes me sit up and pay attention. When retail's running for the hills and smart money's accumulating, that's usually when the biggest opportunities present themselves. But let's look at the other side of this coin because the fundamentals paint a completely different picture. Market data from holders shows the total number of PI holders has stagnated near 14,952. That lack of new network participants reflects what analyst Aryaman Shrivastava calls growing disillusionment among early adopters, with a month-long trend of investors quietly exiting positions. The technical indicators aren't exactly screaming bullish either. The relative strength index sits at 40.27, indicating weak buyer momentum, and low trading volume compounds this bearish signal as bulls remain hesitant to establish new positions. Now here's where things get really controversial, and if you want to stay updated on stories like this, make sure you hit that notification bell because these developments happen fast. User frustration is mounting over ongoing migration problems within the Pi Network ecosystem. Many holders are facing unresolved KYC verification states that prevent access to their tokens. Social media platforms are lighting up with complaints about a second wave of migration requirements. Users are reporting unexpected verification prompts appearing in their applications, and despite parity account announcements claiming a second migration phase began, the Pi Core team hasn't issued official confirmation. One frustrated user posted on X, and I quote, "This Pi of a thing is nonsense. After mining for years, we are denied access to our coin." That sentiment reflects broader community concerns about the development process, and honestly, I can understand the frustration. Nothing kills momentum like technical issues that prevent people from accessing their own assets. The timing couldn't be worse because Pi Network is preparing for a major token unlock event. A scheduled release of 276 million PI tokens is approaching in June. That's approximately $176 million in additional market supply hitting the market. Analysts are warning this supply increase could create serious downward pressure on prices, and current market conditions show limited demand to absorb such quantities. This token unlock represents a legitimate stress test for Pi Network's market resilience, and without improved sentiment or increased demand, this supply surge could trigger significant price declines. From a technical perspective, let's take a look at this chart because the setup is fascinating. Pi Network remains confined between 62-cent support and 66-cent resistance. A successful break above 66 cents would target the May 29th high at 69.31 cents. The MACD indicator shows flat but positive readings, suggesting coiled momentum awaiting direction. RSI readings vary across timeframes but lack the strength typical of bullish breakouts. Moving averages present a bearish alignment following negative crossovers last week, with the 50-period EMA at 67.79 cents providing dynamic resistance on any upward move. Technical support at 61 cents becomes absolutely critical if that token unlock proceeds as scheduled. A breakdown below this level could expose the 57-cent support zone, or even the psychological 40-cent level. So what's my take on all this chaos? Here's where experience in crypto markets really matters. And if you're getting value from this analysis, do me a favor and share this video with someone who needs to see it. Pi Network's immediate future depends entirely on resolving these technical bottlenecks and restoring community trust. The 66-cent resistance level remains the key battleground for bulls and bears, but that whale accumulation pattern is absolutely fascinating to me. Smart money doesn't deploy $180 million without serious conviction. Either this whale knows something we don't, or they're about to learn a very expensive lesson. The migration issues are legitimate concerns that need addressing, but sometimes the best opportunities come when everyone else is panicking. That June token unlock is going to be the ultimate test. If Pi Network can absorb that supply without breaking down below critical support levels, it could actually prove the project's resilience and potentially attract more institutional interest. But here's the bottom line, and this is crucial financial advice disclaimer territory. Nothing I'm sharing here constitutes financial advice. This is purely educational analysis of market dynamics and news events. Always do your own research and never invest more than you can afford to lose. The Pi Network situation perfectly illustrates why crypto markets are so fascinating and unpredictable. Retail sentiment says one thing, whale behavior says another, technical analysis points in multiple directions, and fundamental challenges create uncertainty. What's your take on this Pi Network situation? Are you seeing opportunity where others see problems? Or do you think that whale is about to learn an expensive lesson? Drop your thoughts in the comments because I read every single one, and some of your insights end up shaping future videos. If you enjoyed this deep dive into Pi Network's controversial moment, you absolutely need to check out my recent video analyzing Bitcoin's institutional adoption trends. The similarities in whale behavior patterns are striking, and it might change how you view large-scale accumulation strategies. Remember to subscribe if you haven't already, because we're covering stories like this every single day, and timing in crypto markets is everything. Hit that notification bell so you never miss critical updates that could impact your portfolio. Thanks for watching Gold Rush Crypto Daily, and I'll see you in the next video where we're diving into Ethereum's upcoming technical upgrades and what they mean for DeFi protocols. Stay bullish, crypto fam.